Hey, ladies and gentlemen, well, this will be a Friday market wrap up and some free member content for all the free folks out there. But for my members, you're welcome, man. Christmas came early. Look at this. Amazon is up to 225. The last week or a week and a half ago, it was at 202. And I said, buy it with both hands. Do a bullish double vertical or a burner trade out to the end of December to cover the Santa Claus rally. Amazon hasn't looked back. Look at this. This is where we put the, let me go over to here, synthetic stock on right around there. You're up 14. Well, the stock is up 14%. Your Amazon bullish double vertical and the burner trades are up, I think, close to 500% on the burner trade, right? With the long calls at 220. The long calls at 220 are filthy green right now, folks. So, and oh, by the way, take a look at the S&P 500, man. Look at this thing. It has not looked back either. Predicted this, and it's happening. Look at the S&P 500 here, man. We got that. Oh, there's the Trump rally's fading. Really? Boom. I told you that was bullshit, man. I said this was a short squeeze. Short squeezes last for 3 to 5 days. And on day 6, we went right back to the 20-day moving average, as I predicted. And I said, rip your face off, Realis. Santa Claus rally, engage. It hasn't looked back. So I'm doing this video because, and again, men lie, trades don't. So we looked at the, let's go take a look. The bullish double, this is AR, right? So right there, bullish double vertical on the S&P 500 and the bullish double vertical on Amazon are both printing money. So I'm telling you now, you need to fly your SOP, right? Your standard operating procedure. You're the tick. You're the trader in command, not me. If you're looking at a shitload of profit in both of those trades, go on, take the money and run, right? Steve Miller Band. Pigs get slaughtered. So, because I'm going to brief you on something in a second here, might be time to start dogfighting. I still think this rally has a little bit of legs here. Did you see the macroeconomic data this morning? Little, to be expected. This was good news, folks. Look, so average hourly earnings was at 0.4. It was forecast to go down a little bit. Pop. So average hourly earnings up. That's bullish. Jobs report. Look at the non-farm payroll. Up. It was 12,000, the previous one, up to 36. We were looking for 218. We got 227. Very bullish. Unemployment rate ticked up a little bit. Who cares? University of Michigan consumer sentiment. Boom. Trump rally engaged. And inflation expectations, kind of in line. So, what am I getting at here? When everybody's getting bullish or joining us because we've been bullish, time to start evaluating. One more time, I'm going to tell you, folks, the S&P 500 double verticals are at filthy money, and so are all of the Amazon trades. Got a nice email from a new member today from Solo Amazon a couple weeks ago. They're like, Wiz, I got into the synthetic stock at 202 and the stock's up at 225. You literally made my Christmas. That's my job, baby. Here's also my job. When I see a headline like this in the Wall Street Journal, this is when a guy like me kind of, I'm going to go, hit the head real quick and then leave. So it's called the Irish exit, right? Is this wildly overvalued stock market doomed? Yes, but maybe not, right? So history's good sub-headline here. History shows no link between nosebleed valuations like today's and next year's returns. Expensive stocks can always get pricier. I love this. So absolutely, the wildly overvalued stock market is doomed. How many times have I told you markets don't do this forever? This is a 2-week rally, right? How many times have I told you? Usually the S&P, 7-8 day run, it takes a break. Okay, we are on a sub, but we've had, there's a little break in there and little flat yesterday, I think it was. But this is a monster, right? Not saying it's going to end at any time soon, but we have to be ready. So it might be time to start doing what? Dogfighting the S&P 500. So If you're going to let your S&P 500 bullish double verticals run because you're greedy, good on you. I would still take a look at doing what? Starting to get bearish. What? Come on, no. This is what you have to do, folks. You've seen some of my dogfighting videos, right? You have to fight out of phase, out of plane with the other guy, right? So as everybody's getting bullish, and we can be a little bit, take our profits, get ready to get bearish. I guarantee you we're gonna keep running a little bit, level off at the end of the year, hover mid-Jan, slam into February. I guarantee that's gonna happen. I've been doing this for 33 years, going on 34. Okay, so this is usually what happens. So let's go look. Let's go look at the S&P 500. And one more time, I'm going to remind you, man, if you are looking at massive profits in those trades right now, you need to potentially look at closing them. Go on, take the money and run. So let's go out. I still think I'm not going to repeat myself, but I will as I'm pulling up strikes here. Still think we're going to have, a nice solid year-end rally. Why don't we go out a month from now at least? Is there a January? Oh, January 6th, the worst day in our nation's history. It made Pearl Harbor and 9/11 look just fun. Shut up. January 6th. Let's go out to January 6th on purpose. What's the market at? 60.87. So there's no 60.87 strike. The closest one is 60.90. Let's look at the at-the-money straddle on the S&P 500 straddle. Let's go out to January 6th and see what it's priced at. January 6th. Worse than 9/11, 131 bucks, which means it is what? 260. The total Elizabeth Warren TP up here is what? 260. $1.30 here, $1.30 there. So the options market, not me, the options market is pricing in that the S&P could peak up at 62. Let me write that down. 62. I'll just round up. 25. And the bottom is what? 59.60. It is time to potentially roll inverted. If you have bullish double verticals on and you think, hey man, it's getting a little over our ski tips here, time for the exact opposite tactic, which would be a bearish double vertical. So let's start at the top. Was it 62.25? I wrote it down. 62. I can't even believe those words are coming out of my mouth. 62.25. Wow. 62.25. And then we'll add, oh, wow, there's only $25 strikes up there. That's pretty interesting. I might have to go out to a regular expiration. No, we can still do that. Let's go down. Let's go down to 6,200 and see what we got here. 6,200. Look at that. There's only $25 wide strikes. Now, it just might be because of that. Let me do this real quick. Let's go out to like the regular January expiration. I love doing this stuff live so you can see what I'm thinking. At the money straddle with that is 175. Let's instead of believing me, let's show you the regular Jan expiration. Regular Jan expiration. What did I say? 175? Boom, 175. So you double that, obviously, to get the Elizabeth Warren. So all the way out to the January expiration, it's 62.65. 62.65. And then the bottom is 59.15. Okay, 62.65. Let's see if we have $5 wide strikes up here now. 62.65. A lot of scrolling, Wiz, like when I'm entering my birthday on a form. There we go. So we do have $5 wide strikes up here. So let's do this one. And it gives us a little bit more time. This is a month and a half out trade. Between now and January expiration in the S&P 500, I guarantee you we're going to have some sort of pullback. Profit taking. Folks, if we do that end of year window dressing, I'm a shitty portfolio manager. I need to pack my portfolio full of good-looking stocks before year end. So the idiot investors of mine who read the prospectus don't question too much. Like, wow, we really did bad this year. But look, he's got all the good stocks. I don't know what's going on. I'll go play golf. So we probably will take a little Jan, at least hover, if not pullback. And don't forget, folks, Joe Biden's a fucking idiot, man. He's trying to get us into World War III. There's a lot of crazy stuff going on. Russia, Ukraine, Israel, Iran, China, Taiwan. Nobody cares about our Santa Claus rally. So this also acts, let's call this one definitely a trade, right? Made up that word about 10 years ago. A trade, I want to make money. I don't place a trade if I'm not going to make money. Why place it? A hedge, I don't mind losing money. What? You heard me. It's like, I don't mind not using my ejection seat in the F-18 Hornet. I'm glad I didn't, right? So a trade is a trade that I'm pretty sure is going to make money, and it serves as a hedge against my other long-term bullish positions, like Amazon, for example. If, God forbid, something happens between now and the middle of January, this bearish double vertical ends up printing money to protect my Amazon in case Amazon pulls back for whatever reason. So good. All right, I'd sell, let's just do one contract. I'd sell a single Jan 25, 62.65 call. That's me saying by the third Friday of January, it's not, the S&P 500 is not above 62.65. Wiz, what if you're wrong? Rarely happens, but if I am, that's why we're buying upside calls at the 62.70 strike, right? So, $1.30 credit. With your trade plan that you get here at TOPGUN Options, you write down the double of that. You write down right now 260, and you write down the words maybe eject. Why maybe eject? Well, guess what? Because if the S&P 500 keeps ripping higher and this credit starts drifting higher, $1.50, $1.90, $2.20, if or when it hits 260, that's when you got to scratch your chin and go, I don't want to take a max loss on this trade. Should I eject now? I'm a political science major from South Jersey, folks. I need easy math. So in a credit spread like this, I say double the credit I take in. That's where I maybe eject. Folks, we haven't even placed this trade yet, and I know when I'm getting out of it to avoid the max loss. Haven't even done anything yet, and I already know what I'm going to do. Now, I'm going to click on Analyze, and the first place our eyes go is always right there. Max potential loss. You never look at max potential profit first. Why would you do that? If you're not okay with risking losing $370, why would you care about the profit? As the tick, the trader in command, just like the pilot in command of an aircraft, you put a check mark there and say, I acknowledge as the tick, that's my risk. Now you can bring your eyes up here and go, all right, that's the max profit. 72% probability using at the money volatility in these options of the max profit. 27% probability of getting your ass handed to you if you fall asleep and don't watch this trade. The break even is right there. Now you see this dotted line, that's the current price of the S&P 500. We make money 3 out of 4 ways in this trade. First way, SPX goes down. Second way, SPX hovers. We level off right here, Wiz, and we're flat. We make money. Hell, the S&P can even go up, folks, as long as it stays below what? Our break-even point. Duh. The 1 out of 4 ways we lose money is the S&P 500 just keeps ripping higher. That can happen, folks. So Chris Provin, call sign Kid, one of our fellow members, works with our No Fallen Heroes Foundation. I got invited up to Mar-a-Lago next week for a fundraiser. Trump's allegedly doing a drive-by, and Tulsi Gabbard, the DNI, the Director of National Intelligence nominee, is supposed to be at this event, and I'm auctioning off a jet flight. So I am going to go up and give my 3 to 5 minute No Fallen Heroes Foundation pitch in front of this crowd at Mar-a-Lago. I have got to go do that. Why am I rambling about that? Because there's so much good, depending on what side of the aisle you're on. As Americans, we should all be pretty damn happy that Vivek, Elon are in DC. We're trying to take a scrub brush to things and make things better. That's bullish. So what am I rambling about is the market can keep ripping higher, man. I know I said I've been doing this for 33, 34 years. This might be the year where I'm wrong. We've been beaten down for 4 years and the market is saying fights on. So I could be wrong, but that's why we have our eject point. Now, looking at this screen, we know when we're going to take profits at TOPGUN Options. 7, 8, 9. If I'm looking at a 70, 80, or 90% profit on this $130 credit I take in, close it. Close this trade. Pigs get slaughtered. Do not turn a 70, 80, 90% winning trade into a 100% loser. It'll make you miserable. Don't do it. We haven't even placed this trade. We know when we're getting out from in-loss, and we know when we're getting out at a profit target. Haven't even fired the trade yet, folks. Trading is a form of combat. Somebody's going to lose and somebody's going to win. What side do you want to be on? So use the same methodologies and procedures. I contingency plan in the brief before I hop in my jet and get airborne. Same thing in trading. So that's the bear call spread. That's the roof. We're putting a roof on the S&P 500 up there at 62.25, whatever it is, all the way up there, man. It's in the white up here. Okay. Now let's take that credit, the $130, and go buy a bear put spread down at the bottom. As I'm trying to remember what the bottom was, 59.15. So 59.15, folks, is right here. It's just above that blue line, which is the 50-day moving average. You see that? So I'm actually going to pick a strike in between that green line, which is the 20-day moving average, and the blue, the 50. 59.50. Remember, if you're a free person listening to this, you're very welcome. The S&P 500 likes round numbers. 60.50, 6,000, 6,100, 61.25. It moves in $25 increments. I guarantee you. Been doing this forever. We trade the hell out of the S&P 500. We've been doing sniper shots, baby. We had this week so far, I've had 2 snipers that if you held them would have gone for max profit. Over here in our afterburner group, there it is right there, man. Bull put spread yesterday, I got out in like an hour for a 45% profit. Boom, look at this. Scott got 51% profit, and then a couple days ago did the same thing. We did a bear call spread right here. Boom, out 65% profit. I forget how quick that one was. But folks, if I'm sitting here doing foundation work, I'm sniping. I'm shooting snipers on the S&P 500. Okay, so let's go look at the bear put spread on this trade. Let's bring up this. What did I say? 59.50. I'm going to add option, put. I'm going to buy and then sell. Make sure I have one contract. All right. It was the, oh my God, 59.50, right? I need to take my Prevagen. Right there, 59.50. So I'm going to buy the 59.50 put. Going to have to reverse scroll a whole bunch here. Whoops. Buy the 59.50. Come on, baby. It's like the Price is Right wheel. 59.50. And then I'd sell the lower strike. Let's go to 59.25. Remember I said $25 wide strikes down here. 59.25. Folks, if you're liking any of this, you can sign up for my options weapon school training. I'll talk about that at the end. Oh, and by the way, a couple people keep emailing like, hey, can I get the lifetime Black Friday membership deal? Done. In the past, not going to happen again. Maybe next Black Friday, but the lifetime membership, folks, is valued at $22.5. I think the best I'll do for you is $17.5. That's it. It's back up to where it was. If you snoozed, you lose. Okay, so on your screen right now is a bearish double vertical. You see this? What do you mean by double vertical? There's the bear call spread over here, and there's the bear put spread. So look at the risk to reward. 1 to 3. You're in this trade, just doing over here, one contract. You're risking $740 to potentially make $2,300, man. This is awesome. It's a little bit of a debit. You're coming out of pocket $240. And as I'm talking to you, the prices are changing because the S&P is rolling over a little bit right now, which is fine. Look at this. We peaked and almost, did we kiss high today? Look at that. We failed just shy of 6,100, man. Look, you see my lines on this? It's $25 increments. So we had a rip your face off rally at the open. I was in yoga. Otherwise, I would have shot a bear call spread up here. I'm getting ready to shoot a day bull put spread down here at 60.75 after I shoot this video because it's been going on for 20 minutes. So that's why the pricing's changing a little bit. This is an awesome trade. So one more time, you can have dueling double verticals on. We have our bullish ones on Amazon and the S&P 500 that are physically printing money right now. Close them. Or not. You're the tick. Get on a bearish one. Or take profits in the double verticals you have right now. Wiz, this is a stupid trade. We're going to keep ripping higher. Great. That's what makes a market. I'm not telling you what to do. I'm showing you what I'm doing. And I would do a bearish double vertical out to January. This is covering us for a month and a half of potential something. It is always good to have this type of trade on as you're seeing this. Look at this rip, folks. You know, this is a 2-week rip off this moving average. We haven't seen, let's open up the chart a little bit. Let's go to a 1-year chart. Oops, not year to date. Well, that's close enough. It would be year to date. So folks, look at this. Even back here, we would hit the 20, look at that. It's a heart rate monitor back to these moving averages. We're having a rip, folks. As everybody's happy and ripping, that's when Wiz starts looking to maybe do an Irish exit, okay? Any questions on this, folks? If you're in our Max Afterburner or Hunters, I'm going to post this trade, obviously, like I do with all my trades, right in the Hunters, right in the Max Afterburner group, okay? I'll email this out as well to all of my members, and I'll post this in the email as well, this video, okay? But I'm telling you, man, when I see headlines like this, like, hey, wildly overvalued. Usually when you see headlines like this in a journal, like, hey, retail traders are getting crazy. Hey, we're overvalued. Hey. 1 potato, 2 potato, slam. Not saying it's going to happen. I'm saying it could happen, and this trade will help me sleep better at night. If you like any of this, folks, and you're on YouTube, on our YouTube channel right now, or Instagram or TikTok watching this video, and you're like, this guy sounds pretty smart, you'd be right. Come to TOPGUNOptions.com. Underneath trade groups here, man, you can sign up for solo Amazon. It's only $97 a month right there. Full throttle, it's $295 a month because you get access to 2 live trade briefs. Solo Amazon, you get access to just that live trade brief. Our accelerated retirement portfolio, I think that's $96 a month. That's where we look at really long-term bullish trades, and we also trade our psychedelics. That's where our psychedelic portfolio is. You know what, Wiz? I think I know what I'm doing, but I'd like some training. I'd love to try your options weapon school. Look at this, 6 to 8 sessions, only $297, folks. I've seen some pretty crappy places, like a dude from the 80s in front of a whiteboard on videotape charging, $5,000 for their options trading. It's embarrassing. $297, folks. Why? Because I love doing like this. And clearly, as you can tell, I love to talk. And then finally, well, the lifetime deal. It's done. The Black Friday is done. Oh, I need to update this. This was the old fee, $15,000 one-time payment or 12 monthly payments. Done. It's 17.5, folks. It's back up to where it's supposed to be. So one more time, Black Friday it's in the past, man. Be present, live in the future. Love what we're doing. I guarantee you with these Amazon and bullish double verticals and the S&P 500, the people who got the Black Friday deal in their lifetime probably paid it off already with 2 trades. That's the power here at Top Gun Options. Okay. Finally, one more time, in the spirit of giving, maybe on Giving Tuesday you should have done this, but if you didn't, please do me a favor, man. We need help at the No Fallen Heroes Foundation. I'll put this link in the email and also under the video. Round up for change, man. You can register a credit card or 2 or 3. You pick a monthly amount each month. $100. I want to donate $100 a month to the No Fallen Heroes Foundation. Each purchase, it just rounds up a little bit to the next $1 or $5 or whatever you want until it hits that. And then it gets donated to the foundation, folks. It's on autopilot. I'm asking you to do this, folks. I'm great at asking people for money for Top Gun Options but why wouldn't you be just as motivated to donate to a nonprofit, tax deductible, obviously, and you're helping save and change the lives of our heroes. We have 3 grant recipients going out to a retreat in Colorado next week. $6,500 each, man. This sucks, right? The VA should be doing this. I tell people my mission objective of the No Fallen Heroes Foundation is to go away, is to not have the No Fallen Heroes Foundation, man. But until our government lives up to their promises to us, nonprofits like the No Fallen Heroes has to pick up the slack. So I'm asking you, I'll put this link in there. Please register a credit card. Pick it, $25 a month, man. Whatever you spend in crappy Starbucks, pick that amount, $25 a month to the No Fallen Heroes Foundation. Dedicate, man. Like, you know what, Wiz? I made $1,500 today with one of your S&P 500 sniper shots. I'm going to donate that, man. That would be absolutely fantastic. All right. Good stuff, man. Like I said, not going to Colorado next week, so we'll have a normal flight schedule. We are going to have a weird flight schedule next week with me flying the jet up to Colorado, but Kid's going to do it, and I'll be here so I can go to Mar-a-Lago. Okay, guys, have a great rest of your day. Happy hunting. Make sure you're hedged. We are now hedged with that SPX bearish double vertical. Fights on, namaste, and basi basi. Basi means truth. And there's only way, light, and truth, and that is God. God bless y'all, and I'll see you later.